Hello, Bernard Barchi here, founder and CEO of Be Big Financial Solutions. I want to talk to you about how to utilize life insurance to build wealth. It is a powerful wealth building strategy. It's been around for almost 250 years. However, people in the matrix or the majority of the population have no idea how to use this. However, banks, corporations in the upper 5%, it used to be the upper 1%. They have now learned the strategy and they're doing exactly the same way. We're not taught this in the way we were raised. I mean, I'm born and raised from Pittsburgh, Pennsylvania, a blue collar town. And you're not taught how life insurance can really build wealth. My company teaches wealth building strategies. So let me share my screen with you real fast. I'm going to give you a scenario of how this works. Okay, so giving you this idea, and I call it the field of dreams. All right, this is where your money is going to grow. Now, this is the idea. This is like planting a field when you end up using life insurance. Now, you can fatten these things up too. There's different strategies. However, you notice the key word I'm using? Strategy. It's not buying life insurance to die. This is a wealth creation tool. So this is your field of dreams. Okay, take a look at this. This is wealth creation utilizing life insurance, and great wealth is going to be flowing to you now, which is flowing to me. I use this strategy. It's very powerful. So I'm going to give you a scenario of how you can pay your bills using life insurance. Once again, it's a design. What do you want to use it for? Okay, you could use it for college funds, taking vacations, financing equipment, whatever you want to do. It's up to you. You could use it to start paying bills, and then it just branches off into do more. Now, the wealthy end up using numerous ones of these. They take as many as they can. The government regulates life insurance because it's a private contract from the government. Bankruptcies, liens, collections, alimony, all that stuff. I mean, it's a private contract, and that's why the banks use it. Banks lock money into high cash value life insurance policies to protect from who? The government. And where do they even get money from? They use our money. So they take our money, they lock it into high cash value life insurance policies to protect it from the government. And think about it, we hand our money, and who protects our money when we give it to the bank? Banks don't even protect our money. It's protected by the government. Go figure. Success leaves clues, everyone. Okay, so wealth creation using life insurance. Take a look at this scenario. Okay, so $5,000 in expenses. Okay, this is just an idea, and you can design these differently. I could do spreadsheets for you, and I could show you how yours works based on what we're allowed to do. So this is the normal scenario. You get your money, you deposit into the bank. Okay, and if you got a JOB, you got a paycheck, it's automatically deposited into the bank. So you end up then use it to pay your mortgage, utilities, insurance, car loans, credit cards, personal loans, items like that. And then what do you have left? Absolutely no money. Well, you have a little bit sometimes. So there's a lot of people living paycheck to paycheck. We'd spend all of it, and then we see what we have left, and that's how we live our life. We should not do it that way. We should do it another way. So we want to utilize this bank. Okay, this is literally Fort Knox. I used this picture. So this is Fort Knox. Your money goes in there, boom, you lock it in, you never touch it. However, you still get to use it. So check out this scenario. So we utilize a dividend whole life insurance companies. Now dividends come to us. We're the owners. Dividends are good. You got to own shares in a company to be able to get the profit from them. However, you don't need to own a policy, but since you own a policy, you get the dividends, and that's the key. You want the money paid to you. So using that scenario, remember, it's $5,000 worth of expenses. We got to add 10% to the cost of insurance. So that's going to be about $500. All right, but understand this scenario. So you're purchasing life insurance for protection, but you're protecting your money. That's the key. You're not protecting anything else. You buy insurance on this thing, you're protecting the phone. You got homeowners insurance, you're protecting your home. You're buying life insurance to protect your money. You work hard for that, man. We got to stop losing that. That's why the wealth gap in the United States is outrageous. So we now add 10% because you're building the field. Okay, build it, they will come. The field of dreams. So it's going to take a little bit of time. So you want to be planning like this, and we do it for you. 10% is going to go toward just to cover the cost of the money that you don't get available at first. Okay, so you want to be able to put this into it. So that's going to be $6,000 a month going into a life insurance policy. Okay, So remember, this is a plan. It's a lot of money. However, watch this. Okay, so 6,000 goes into the fort. Okay, so it goes into Fort Knox. Once it hits the accounts, 2 to 3 days, boom, back into your account. The first time you take a policy loan, you remember, you're not using your money now. You're taking a policy loan. You're going to use insurance companies' money, OPM, other people's money. That's leverage. This is why the rich are rich. They utilize leverage. They don't waste their money. We do, not me anymore. But the majority of the population don't know how to use it. They just lose their money. We got to stop losing it on bills. Okay, so 5,000 gets pulled policy loan from the insurance company now, not from you. You take a policy loan, it goes in the bank. You now pay your bills. So you do that the first month, 6,000 in, 5,000 out. Do that the second month, 6,000 in, 5,000 out. Do that the third month, 6,000 in, 5,000 out. Now we do the math. You put in $18,000. You took out. Okay, so the $18,000 is into Fort Knox, but now you took a policy loan for 15K. Now the 18K that's in Fort Knox is not just sitting there. It's now working for you. It's 3% guaranteed ROI, compounding uninterrupted growth. You never withdraw your money, just add to the piggy bank. Okay, plus dividends, and it's never not paid a dividend in 110, I would be honest, it's 116 years right now. Never not paid a dividend. All the world wars, Great Depression, all that stuff. Never not paid a dividend. Dividends pay between 1 to 2.5. This year alone, 2022, it's paying 5.25. That's pretty good. That's better than you get in the bank, 0.01, 7,200 years to double your money. Take a look at this. This is so powerful that that's how wealth is created. Now, just calculate for the whole entire year. Calculate your bills. Now, I also did this with a business owner who has 32,000 that comes in every single month, but they spend a lot on bills. We're not helping them build more wealth. We're just helping them capture more money. Hence the term I use is recapturing wealth. We take our wealth, we use an insurance policy to recapture it first before we use it. Okay, so that's how this strategy works. Get back into touch with the person who sent you this video, and I'll explain to you how this works based off of your scenario. Okay, so thank you very much, and you guys have a good day.